Welcome. This is the Lifetime Cash Flow Through Real Estate Investing podcast. This is where you'll learn strategies to help you achieve lifetime financial freedom through real estate investment. Your host, Rod Khleif, has owned over 2,000 homes and apartments, and he brings experts in all aspects of real estate investment and management onto the show. Now, here's your host, Rod Khleif.
Hey, just a couple of quick things. You guys know I'm a huge proponent of mindset and the psychology of taking action, and how it's my belief 80% of your success in anything is your psychology and your mindset, and really 20% is the mechanical stuff, the real estate knowledge. You know, I even recently did a Facebook Live clip on creating vision boards and how do you use those to get your goals and things you want. Well, you guys aren't going to believe this. You're going to absolutely love who I've got coming on the show on September 25th. John Asseroff from The Secret. He's the guy that showed us his vision boards in the blockbuster movie, The Secret. In fact, he's the reason millions of people now have vision boards. John is that guy. So make sure you check out that episode on September 25th. It will be epic. And I've finally launched my course and coaching program. If you're interested in this business at all, I can humbly say it's the best multifamily course out there. And I personally coach you on how to crush it in this business and in your lives. So if you want to get more information on my course and coaching, text the word crush to 41411. And last, I've created an incredible Facebook group for you guys. If you're interested in multifamily investing at all, already over 800 people on it. I'm sure it'll be to 1,000 here shortly, and it's very active. And all you have to do is go to multifamilycommunity.com, and there's a direct link to the page. So go sign up and can peer mentor and learn from each other. It's just an incredible environment. All right, let's get to it. Welcome to another edition of How to Build Lifetime Cash Flow Through Real Estate Investing. I'm Rod Khleif, and I'm thrilled you're here. And I know you're going to enjoy the guy that we're interviewing today. Super high energy, very successful, and has his own radio show called Real Estate Deal Talk. His name is Abhi Golhar, and first read the book Rich Dad, Poor Dad, like the rest of us, and now is very, very successful in 3 markets, Atlanta, Charlotte, and Dallas, and focuses on value-add properties. And we're excited to have him on the show. Abhi, thanks for being here, brother.
Hey, thanks for having me, Rod. I'm looking forward to it.
Absolutely. So that was a very weak introduction. I want you to take the time to tell us who you are and where you started, and take it away.
You got it. Humble beginnings is where I started. I grew up in a really small town called Portage, Michigan. When I was growing up, I was probably, I think the city was maybe 50, 60,000. For me, that's small. And then I ended up moving to Atlanta in 2007. But the time from when I left my parents' house to go to Michigan, pursue my 4-year degree in electrical engineering, to finishing that degree was very, very, very difficult. I knew I had a knack for problem solving and engineering skills and this kind of stuff, but I also really didn't like that world, because during my growth in college, I discovered, hey, I have a personality.
Right.
And I love real estate. I wanted to build wealth instead of just being a desk monkey for somebody. And again, there's nothing wrong with that in any stretch of the imagination. I mean, I have friends that do really well as being even entrepreneurs in their organizations and for their companies. But for me, it just wasn't my thing. So I started investing in myself. I read a lot of books. One that you mentioned, Rich Dad, Poor Dad, Think and Grow Rich by Napoleon Hill, Acres of Diamonds. So that first, what is it, freshman year, that summer, I read so much, everything from the Stanleys. I have an entire library here that I just read. And I thought to myself, what do I need to do to invest in real estate? One of the things that I noticed was I needed skin in the game. And this was back in 2002, 2003, when you could get your ninja loans, right? Your no income, no job applications, and you can get approved for that. But I didn't want to go that route. I needed cash, and I wanted to invest properly. What I started doing was I found one of my mentors kind of taught me this little business, and I found classic cars on Craigslist. So if you have like my all-time favorite car is a 1967 Ford Mustang GT Fastback with a 4-barrel 289 V8 engine, right?
Love it.
And I found these cars on Craigslist, and I resold them on eBay. And I was part of like this mass export of classic cars to Australia, to the UK, to France. And that's how I built my little nest egg, or my real estate fund for myself, just in a bank account, just a checking account. And that's how I got my start. I took that, invested in 2 projects in inner city Detroit, realized that I didn't know what I was doing. Both of those projects flopped, lost a little bit of money on both projects.
When was
luckily
this?
able to
What
wholesale
year
them out.
was this, Abhi?
This was 2006.
Okay, before the
Yeah,
crash. Got it. Okay.
Yeah, before the crash, which is, I don't know if I should laugh. I definitely laugh at myself now, but it's kind of terrible, right? Like everybody's making money in real estate, and I'm the only person that's losing money during this
Well,
time.
you were in Detroit though, and I'm going to hate mail for that comment, but that was a tough market back then, and still is. I mean, it's evolving now. That Quicken Loans is that guy spending a lot of money there, but okay, continue.
Yeah. So I got out of those projects, and the moment that I realized I didn't know what I was doing was this. I got a text message from my contractor, and he said, "Listen, you need to go to inner city Detroit." And this was right when it started snowing. I got this text message as I was finishing class, roughly around 7 or 8 o'clock. Labs were done, group assignments were done, and he sends me this text, says, "Hey, you got to get to your project. I've left a shop vac for you. Hey, you'll meet me in person, Rod. I mean, I'm 5'5", 120 pounds. So like, I know what a shop vac is.
Soaking wet, right?
Right. I mean, I know what a shop vac is. I know what a sledgehammer is, but I'm not going to pick one up. That's just not my kind of thing. So I have this 1992 Honda Civic DX, this little hatchback, bald tires car. My parents didn't even know. Mom and Dad, now you know I had a car in college. But I had this car, and I drove it to Detroit. As I was leaving Ann Arbor, it was just starting to snow. When I got to Detroit, it was a full-on blizzard. I pull into my rental that I was rehabbing at the time, go downstairs, I hear running water, and then I'm like neck deep in water. It's ridiculous. I'm like, okay, now I know what the shop vac's for. In that moment, though, I was cold. I went to sleep that night. Like, I had no mattress. I had no bed. I had nothing. Just my mindset of, holy cow, I am screwed. But also knowing that I could only go up from here, and that's what excited me a little bit. And it was
this was a place in Detroit, and
yes.
the lines had broke because they froze, and you've got water. And God, I mean, if I could count the times that's happened to me, I got $1 for every time that's happened to me. Yeah. But that's at least you didn't let it dissuade you. Many times when that happens initially in somebody's real estate investing career, that's it for them. They think that's how it is, and it's not how it is. Sure, it happens, but you just shake it off and move on. So
Yep. And that's how I started. I mean, mom and dad, like my dad, both my parents are immigrants, and my dad came here on a scholarship from India. He graduated from Michigan, the same school I went to, with a PhD in IOE. He subsequently was a professor, and he's been teaching since '83 at Western Michigan in Kalamazoo. And so my mindset growing up was, okay, got to study hard, got to get a good grades, good job, just like what Kiyosaki talks about in Rich Dad Poor Dad and all the subsequent books that he's written. And I'm like, wow, it's really hard for me to identify with that mindset. And every time I used to ask my dad about like stocks or investing, he always used to say, hey, you know what? You have a mutual fund, you're investing in an IRA, but you don't have to worry about it. You don't have to think.
You just focus on your career, son. Now I had a father that was a PhD as well, and that's the mindset. And it is what it is. It's you know, you brought up that way, and there's a comfort to it. And unfortunately, my stepfather was employed for 30 years with Continental Airlines, and he thought that was job security, and they laid him off. So guys, those of you listening, the only job security is between your ears. And
that's right.
So continue. So, I mean, you started, and now look at you. You've got, I know you've got an excess of a $15 million portfolio in multifamily. You've got this syndicated radio show. Fill in the blanks. What else has happened? What got you to where you are now?
So I landed in Atlanta. I kind of did a horseshoe in the Midwest. So I went from Ann Arbor to Lincoln, Nebraska. Long kind of ex-girlfriend story. And then I moved to, I'm like the hopeless romantic, right? That's just kind of the way that I used to roll back in the day. So Lincoln, Nebraska, I sent a lot of letters to Warren Buffett, and that clearly didn't work. And then I moved to St. Louis. Again, followed my mentors at the time, but whenever I was moving, I was always learning about real estate. And I was really scared of entering back in after my Detroit challenge. So when I moved to Lincoln, I found this guy, Andy. He is, I think, Vietnamese, and he had this portfolio of single family homes. He had like 110 or 120 of them. I'm like, Andy, how are you doing what you're doing, brother? I barely understand your English. Like, but he was rocking and rolling, man. Like, it was so awesome to see that. And he helped me get over the fear of knocking on doors. And and just selling myself and saying, you know what do you have for sale? Do you know anybody in the neighborhood that's selling? What you got? That's what helped me kind of get back on that bandwagon.
Seeing somebody else successfully doing it. I'm really glad you
Absolutely.
brought that up about the fact that he was difficult to understand, maybe had a heavy accent. And I talk to people that have that situation, and I'm really glad that you brought to light his success, because it's only a hindrance if you believe it's a hindrance. And so,
Boom.
That's
right.
I'm really glad you brought that up. And hopefully the people that I've had conversations with recently listen to this episode, because you know who you are. And please realize that it's what you believe. It's your belief systems. And there's a reason belief systems acronym is BS. So it's important that you recognize that. So
that's right.
Why did you start real estate? Was it the Rich Dad Poor Dad book? Is that what got you going?
I realized that real estate, there are two things that I firmly believe. And I'm a student of life. If there's one thing that I know, it's that I don't know everything. And it was only a couple weeks ago where I kind of put two and two together. I invest in businesses for lifestyle. I invest in real estate for wealth.
I love it. Love that.
And
I'm going to steal that quote. Love that.
Go for it. I mean, and it just blew my mind when I put this together. I'm like, oh my gosh, because look at the history, right? I'm an electrical engineer, so I'm kind of like Iron Man, right? It's like I can take a process that's kind of fumbling and it's bad, and I can remove all the toxic processes and make it better. Whether it's a product, whether it's a service, whether it's a business process, whether it's people, it doesn't matter what it is, I can make it better. So in doing so, I realized, wow, I have this super cool talent. The same thing on the real estate side. And for me, I'm, again, 5'5", 120 pounds. I don't necessarily have to do the work, but I can empower people around me to do that work, to do the best quality work that they can do, so that we can cumulatively achieve a result that's above and beyond what we're generally getting in the market. Am I saying that we never have problems? Absolutely not. Like, I keep going through contractors every now and then just to find that one
that's
or two.
That's always a challenge. Contractors, and that's part of this business, guys.
Absolutely.
Those of you, if you haven't encountered that in your real estate career yet, you will. And it just is what it is. And I love that quote. So you've developed businesses or built businesses or been involved in businesses to generate income that you utilize to invest in real estate. Most of the super successful people in real estate have started or continue that path. I mean, that's anybody that's intelligent takes their money they make from other opportunities, puts them in real estate, if nothing else, just for the tax benefits. I mean, forgetting all the other benefits. Why did you start the real estate radio show, the Real Estate Deal Talk?
I think it's everything that you and I are talking about here.
Okay.
I was so frustrated. Like, I used to go to seminar after, oh my gosh, like,
right,
until my ears were bleeding. And the one thing that I noticed people could never take away, the reason that they were never successful, is because their inability to execute.
Oh, I love it.
And that just wasn't taught. I'm like, why are you spending $35,000 for a fur bus tour of Phoenix when you can partner with, say, anybody in that neighborhood or anybody locally that you trust, that you say build a relationship with, a mentor that you jive with really well.
Use them as a sponsor, and you're off to the races. Yeah, it really is mindset. And you may not be aware that on my podcast, I do these little 5 to 8 minute clips on the psychology of success and taking action, because that really is 80% of it. I mean, 20% is the real estate stuff we're talking about here. 80% is actually taking action, actually getting outside your comfort zone, because the quality of your life relates to how far you can get outside of your comfort zone and taking action. I love it. I'm really glad to hear that's why you started your show as well. That's probably why you're so successful. Good for you.
No, it's a lot of fun. Like, I just got tired of people just getting burned by folks, and I started with nothing. Like, I started reading Rich Dad Poor Dad and then connecting with people and then getting burned myself and having the wrong mentors. I'm like, wait a minute, if I can just be a resource for somebody else, you don't have to work with me. You can't hire me as a coach. I don't have any programs, nothing. Everything that I'm doing, whether it's the radio show, the podcast, whatever, is just for you, so that you can learn whatever you need to learn. And
that's awesome.
If you never get in touch with me, that's cool too.
Yeah, that's awesome. I love where your heart's at and what's driving you. And those of you guys, he's got a great podcast as well as the radio show. So the radio show was Wall Street Radio?
Yep,
That's
Wall
it.
Street
Okay.
Radio Network.
Okay,
Yep,
and
you got it.
then the podcast is Real Estate Deal Talk Podcast. Okay,
You got it.
fantastic. So let's talk about due diligence. Speak to your thoughts on due diligence and numbers and deals.
Gosh, if there are two words that are just incredibly important, I love residential development, and I've now started getting into a lot more multifamily just because that's where the next progression of my acquisitions are. So when I'm looking at deals, there are a couple of important things that I look at. One, the person that's bringing me the deal. I need to know, does this person understand the numbers, and are they presenting a package that makes sense? In the multifamily world, unlike the single family world, brokers and folks that are bringing you deals don't have to disclose anything. You know, in residential real estate, there's disclosure, 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 disclosure. In the multifamily world, they can paint a deal that's crap to be a bed of roses, but it's up to you to determine, wow, does this really make sense? Because you can be buying something that just doesn't, is just a bad investment. In
Sure.
Atlanta right now, for example, you can go go right by the airport, Hartsfield Jackson, and you can find cap rates, say between 7.5 and 8. But that's unfortunate because those cap rates needs to be significantly higher. The risks there are significantly higher, and we're also not talking about cap rates that are adjusted for capex. One of my buddies purchased roughly about 100-unit apartment complex right by the airport, and it's just the numbers for me didn't make any sense. I mean, I'm looking at roughly 10.5 to 12% cash on cash. I wanted an 8.25 cap, and that's it. You know,
What's your debt service coverage ratio minimum?
1.2.
Okay, well that's
Yeah.
less than mine. I mean, that's good though. I mean, if I like the 8 plus cap, and I like the 10 to 12% cash on cash. Those are actually two of my minimums. So, where are you looking now? What markets are you targeting?
I'm looking at your secondary markets. So if you have Atlanta, which is a primary market, anywhere 30, 45 minutes of a drive, not including traffic time, because Atlanta can be a little crazy.
Sure.
But 30 to 45 minutes of drive time, I'm looking in those secondary markets.
Right.
I'm feeling right now Atlanta, if you're like in Midtown or downtown,
well, forget it. Those cap rates are institutional grade. I mean, they're for a REIT that has no cost of funds, that can just go in there and buy a 3 or 4 cap, and they're happy to have it, and that's it. But no, I get it. So no, I love it. So 30 to 45 minutes out of the metro, and those of you that live in a big metro, i.e., a Phoenix, a Dallas, a Houston, an Atlanta, these are words of wisdom, and that's where you should be targeting, these secondary, and even beyond that, even tertiary, even smaller towns, as long as they've got enough of a population to sustain the property. Yep. So let's talk about wins and war story. Let's come up with. Tell me about a victory. A super win, and tell me about when you really got besides the water up over your head in the house. Tell me about a war story where you got your nose bloodied.
I would say, so this is a residential deal. I'll point to a residential deal. In Atlanta. This was a lot that, it was an existing house that we purchased in Old Fourth Ward. This was roughly about 2.5 years ago. I think I did something about this. I can't remember. Roughly about 2.5 years ago. And it was on the corner of East and Fortune. This was when Old Fourth Ward was just heating up.
Okay.
And
so I don't know the area at all. Is this an area that's now gentrified or gentrifying or something?
Yes.
Got it.
Yes.
Okay,
this is now pretty much a fully gentrified area.
Yeah. Fantastic opportunities, guys. You've heard me talk about it a million times. If you can get in front of a gentrification, it's a home run. So what happened? What went wrong?
So I didn't vet the lender as much as I wanted to. So the objective for this property was twofold. One, to acquire and redevelop. So we wanted to rezone it. We didn't get the zoning that we wanted. So we decided, you know what?
Let's go ahead. When you say redevelop, were you going to do another single family, or were you going to put another single family? So you were just going to put up a real nice single family and sell it, basically.
You got it.
Okay.
Yep. And it would be sold to retail. So it would just be sold to a homeowner.
Sure.
So we got all the way through the permitting process, but I realized that about halfway through the permitting process, we started getting a couple of interesting questions from our lender. The lender was out of the Northeast, primarily a multifamily lender. And this lender's deal, this single family was this lender's first new construction single family deal outside of the Northeast.
Like in ever? Or
ever.
Oh, geez. Oh,
And
wow.
I didn't ask that question
Oh, okay.
before I got into bed with the lender.
Mm,
So permitting times in Atlanta back then were super slow. Now they're a lot quicker,
right.
but it just took us a long time. We had to renegotiate everything. We got a lot of red lines back from the city saying, okay, well, you can't have 2-car garage. You can only have a 1-car garage. You can't have these many floors, these many square feet. You can only do this, because they were getting really, really restrictive on what you could do in Old Fourth Ward and what you couldn't.
Okay.
So back and forth with the city, this lender says, you know what, I'm tired of this. I don't want to renew the note. And we're coming up, our note was 12 months. We're coming up on 8 months, 8 or 9 months. We said, listen, it's going to take a little bit of time. We're giving you a heads up. We'd like to renew. We had our deposit ready. We had the extension fee ready. They charged us about a point to extend. We said, no big deal, because we believed in the project. Here are the numbers on the initial, when we bought it.
Right.
We bought it at the acquisition was $250.
Okay.
We were going to build a 2,200 square foot, 3-bed, 2.5-bath, 2-floor modern for a total of $250,000.
So you'd have $500,000 in.
Yep. Reselling at $775.
Okay. So nice hit. I mean,
Super easy.
Right. Had you done some of those before, or was this the first?
Yep.
You have. So you've raised and I mean, eliminated whatever's on the land, and so this was a model that was proven to you before.
Yes, and that's what we like. I mean, we'll kind of let the market kind of flush out where we need to be in terms of project scalability and just how difficult the project is. Because if the market is too saturated with new investors, even like in multifamily right now, it's kind of like,
sure. No, there's going to be a glut, and if you've got too many people building like you're building, but so you did this model you primarily did in Atlanta in this particular area.
Yes, exactly. And this is East Atlanta. So you're looking at Old Fourth Ward, Grant Park, Inman Park, Kirkwood. So all these areas are really tied together, and they're seeing really good appreciation and value. So we thought, hey, you know what? This is going to be a next hot area.
What happened? What happened? What was the end result with this lender?
Okay, so we had to, it irritates me even today. We sold it off to a builder.
Okay, so you got out of it.
We got out of it.
And he made a fortune. Yeah, I already know where this is going, right? Well, I'm sorry, but so what's the lesson? What's the lesson? Let's leave the listeners with the lesson.
Lesson is, just because lenders say they have what they have, make sure you vet your lenders just as much as they vet you.
Love it. That's great advice, guys. Yep. Absolutely great advice, and that's a painful one. All right, tell me about a win.
I'd say the 200 unit in a little north of Dallas.
Okay.
That was a
Now, you just bought that recently, right?
Yes, we closed on that in February.
All right, tell me about the deal. How'd you find it? Give us some specifics on it.
Yeah. So one of the biggest things that I do that I feel like a lot of folks need to start doing, especially if you're new, is networking.
Okay.
I have a really good team in Dallas, and we were a co-sponsor on this deal. Okay. It was a $15.5 million acquisition, and it was a good, tightly knit broker relationship. Everything in real estate, just like Rod, is relationship driven. You have to have the right relationships, and you have to be able to prove to them that you are serious and you know what you're talking about, not just using some templated email that you get from one of the coaching courses, because the pros can sniff that out really fast.
Sure.
So you have to get on the phone.
But you're saying a lot of things. I want to stop for just a second.
Sure,
and you guys have heard me say it a million times. This is a relationship business. It's a relationship with the brokers. Yeah. It's a relationship with the bankers. And those relationships are worth their weight in gold. And you're right. You don't just send emails to brokers. You call them. And then ideally, if you're really on your game, you send them a handwritten thank you note when they send you a deal that doesn't work. And you're in this for the long game. You are building relationships for life. It's very, very important, especially in this hot market. So you found this deal. You had a broker. You co-sponsored the deal. So there's some other KPs involved. And you... $15.5 million, and you've taken it down. Are you involved in the management at all, or are you just an investor in the deal?
Just an investor in the deal.
Okay.
Yep. So so I was able to help raise capital. We did a lot of conference calls, put together webinars, and we raised the capital that we needed. We needed roughly about 25% down.
Okay. And
we spread that out across our list. We kind of did a quick little blast saying, hey, listen, we have an interesting opportunity. Let us know what you think. And here's a day and time for the webinar conference call. And these are investors that we've done business with before as well.
I see.
So
Okay,
they're
great.
pre-existing relationships, which is
great.
always a good
That's
thing.
a very important point, guys. You don't advertise the syndication unless you've got a pre-existing relationship, unless you're doing a 506c2 accredited investors. But okay, so
and you can also advertise with a Reg A now, right?
Yes, you can. Yes, you can.
That's right.
Yes, you can.
That's right.
Yeah,
that's more of a
that's
crowdfunding thing.
Not as common, but yes, absolutely in the crowdfunding space. Yes. Okay, so let me ask you this. You are really, really driven. And I like to ask this question when I encounter people. I mean, you've done the cars, you've done the residential rent flips, you've developed and or built other businesses to fund your real estate and now you're in multifamily. What's your driver? What makes you jump out of bed in the morning?
Family.
Okay. Okay. So
family. Family and freedom. Family's first. Family and freedom. Because I love, I'll add to that. Family, freedom, and giving back. Otherwise, I wouldn't do the radio show and stuff, right? Like, I love my family, and I want to have the freedom to spend as much time with them when I want, whenever I want, for however long I want.
Love it. That's one of my favorite sayings. I love that. I want to be able to do whatever I want, whenever I want, wherever I want, with whoever I want.
Yes.
Yeah, love it.
And the freedom to be able to choose.
Right.
The freedom to be able to choose which deal I'm going to do and not have to do a deal because I have to. You know, there's so many people right now, even when they're raising capital or even like institutional, right? Institutional, they'll go raise $100 million bajillion on Wall Street and then say, hey, now I have to make buying decisions. But sometimes they have to spend capital, otherwise they'll be penalized for not using it, or they'll look bad to their Wall Street investors. What happens as a result is they're making dumb buying decisions, and then they'll pay somebody to put together a report of the hottest markets in Atlanta, one market, or in the United States. Let's say Atlanta is a market where they made bad buying decisions, and Atlanta just happens to be in that report just because they got to offload property. The same thing I've seen with just your ma and pa, just even your first-time investors, is they want to get into a deal so bad that they're willing to bid up and bid up and bid up and bid up. And then what happens?
Oh, they overpay. That's how come auctions are so popular. You know,
exactly.
People they have very, very low opening bids. Everybody gets excited. They get caught in the fervor. And especially guys right now, you have to be careful. If you get a property under contract, you absolutely, once you're in due diligence, need to be thinking to yourself, why do I not want to do this deal? You need to make sure the numbers are right. You need to make sure, you know, you've got some minimums. And that you stick with those minimums because commercial real estate, i.e. 5 units plus in multifamily, is completely empirical. It's not an emotional purchase. I mean, they're numbers. If the numbers aren't right, you don't do the deal. I mean, all things being equal, of course, you're looking at area, you're looking at crime, you're looking at, you know, demographics and all that stuff, but the numbers have to be there. Love it. Yeah, so what do you think's the biggest lesson you've ever learned? Was it the one you just shared with me, or is there another lesson?
I would say be patient. I guess two. Be patient and be aware. Like,
what do you mean by both of those? Please expand on both of those.
So when I first started out investing in real estate, I guess alluding to what I talked about a little bit with wanting to do a deal so bad that I was willing to do anything. Don't do that.
Don't do that. Just don't do it. Just don't do it. Okay. Love it. Love it.
Don't do it. Just don't do it.
Right.
I would say, in terms of awareness, what type of investor are you? Right? Like, are you the type of investor that will, like, are you the adventurous type? Are you the type that says, wow, well, I really have no problem taking an obscene amount of risk just to figure this out? Or maybe you're a dentist that has $250,000 in an IRA and you know you're going to have a check next week, so you can throw the $250,000 in something. What type of investor are you? Are you the type of investor that's going to just sit and you want a check every single month from an apartment complex or from a single family portfolio of rentals? Figuring that out will then make you a better investor for the long term, and you'll also in turn build a business in real estate and not a job in real estate. You know, there are a lot of folks that jump into the real estate business to create a business, but they end up creating a job because then, I mean,
well, certainly if they're buying and selling,
yes.
if they're in residential flipping or wholesaling or any of that
yes.
stuff, if they're investing in multifamily, then I believe they are building a business, as long as they continue and hopefully exceed their monthly obligations. No, that's good. And you're right, as far as awareness. You need to evaluate your risk muscle. You need to evaluate whether or not you really are going to be comfortable taking action and that you're okay with developing that business versus being passive. No, that's sound advice.
Yeah.
All right, fair enough. Last question. What book do you gift to other people the most?
I would say if you're just starting out, Rich Dad, Poor Dad is a great one.
Yeah, that's for sure, of course.
I would also say Power versus Force.
Oh, that's a great book. Great book. I haven't heard that title in forever. That's a great book. Yeah, that's a very illuminating. You know who pointed that book out to me was Wayne Dyer.
Okay.
I saw Wayne Dyer speak. Unfortunately, he's no longer with us. If you guys haven't ever read any Wayne Dyer's books, go read them all.
Incredible.
He's fantastic.
Incredible. Yeah.
But yeah, he pointed that book out to us once when I saw him speak here in Sarasota. Well, listen, brother, thank you for being on the show. How do people get in contact with you?
Well, I'd say go to realestatedealtalk.com. That's really where I live. I'm everywhere on social. And just a shout out to you, man, to keep doing what you're doing. It's because of people like you that make my job significantly easier. And I feel like I'm standing on your shoulders. I mean, you guys are the giants in this industry. And for me to be, for you to say, hey, man, come on my show and help out.
Thank you. And you've absolutely added value today. And we're really grateful that you're on the show, my friend.
You got it. Thank you very much.
Take care. See you later.
Thank you for listening to the Lifetime Cash Flow Through Real Estate Investing podcast. If you've enjoyed the show, please subscribe and then take a moment to visit iTunes and leave a 5-star rating and review. For more resources to connect with us further, please visit our website at lifetimecashflowpodcast.com. Tune in next week for our next show.